A very good afternoon and welcome to HYCM's online trading workshop with myself, Giles Cochran, Chief Currency Analyst here at HYCM. I hope you're all doing very well and welcome to the session ahead. Just to be aware that during the session we'll be looking at different currency pairs, entries, exits, and the whole idea of this webinar is to show from an educational perspective how I, as a professional trading background, go and understand the FX commodity indexes. So I do hope that this is a helpful time. And don't forget that at the end of the session, you can let me know what your trades, what currency pairs you're looking at trading, and I can give you some pointers along the way. So don't forget to put into the question panel what you're doing with your trading. Without further ado, we'll just get into the session. The special topic we'll be looking at today is I'm going to give you a top tip for recognizing legitimate breakouts of trend lines. You know, a trend line break can be an important indication of price action. I'm going to give you a little tip for how to recognize legitimate versus fake breaks of trend lines. We'll give you a little help on this. The handout for the session is under the handout section. You can just click on that and double click the workshop handout. And when you double click the workshop handout, you will see something like this. And it just gives you the 5 key areas I look at each time I look at the markets, looking back, looking forward, looking at the charts, looking at your risk, and looking at the outcome of your trade. So don't forget to go through that handout, print it off. You can keep it beside your desk for the future. If there's any topics that you would particularly like to have in the future, don't forget you can email topic suggestions to myself at giles.cochran@hycm.com. I'd be very glad to have your input from anything you'd like to see ahead in the future webinars. And without further ado, if I could just ask you to turn to your handout and we'll start looking at these key areas. So we're going to go through these 5 different headings, starting with looking back before we look forward. And before we look at the charts even, we want to look back and to see how the market has been behaving. Now, the key kind of principle we're looking at getting and understanding is how to trade strong currencies against weak currencies. We're always looking for reasons. We're always looking for reasons in order to take a currency position. And the key aspect we're looking at here is trading strength against weakness. Once you have that key concept, you're well in the way to understanding the key concept of trading strong currencies against weak currencies. We want to find fundamental reasons for strength against fundamental reasons for weakness, and then, and only then, do we apply our technicals. So for today's session, we have the Canadian dollar, Japanese yen in focus. And I'm just going to show you how that's sizing up for the CAD yen. Now let's take a look here at the CAD yen pair. Now we can see that the CAD yen has been moving up higher during the session. Now that has been on a number of different reasons. First of all, we've had oil prices rising. If you just take a look at oil prices, you can see that oil prices have been on a real tear recently, and they've taken out those recent highs. You can just see those recent highs have been taken out by the strong rise in oil prices. We're up above that 42.50 handle. Price just broke through and took out that level very, very strongly. Now, with that strong breakout to the upside, of course, oil is highly correlated to the Canadian dollar. And when we see strength in oil, we also see strength in the Canadian dollar. So anytime you're trading the Canadian dollar, make sure you have an idea of what's going on with the oil market. So that's been the first reason for the Canadian dollar strength. The oil market has been rising. There was a surprise inventory draw in the private API data last night. It was a private draw of around 8 million barrels, and that was a large draw, which means that there's less oil So that less oil has prompted price rising alongside the risk on sentiment we're seeing in the markets at the moment. Let me just take you across to the other screen. Just going to move that. Okay, so let me just show you. You can see here that European equity markets have been trading high in the session. We have bond yields higher in the session. We can see European bond yields higher. We can see commodity prices, crude, copper, aluminium, higher on the day. We also see gold and silver rocketing higher. The volatility index, the VIX, is lower. So we have a classic risk on sentiment mood. Now, if we go back to our other screen, we can have a look at the currency space. And we can see that we are seeing very clear risk on moves in the currency. We have broad strength in the commodity currencies, Aussie, CAD, New Zealand dollar. And we have seen a little bit of strength in the Swiss franc, but we are seeing continued weakness in the Japanese yen. So pretty classical risk on moves. That has been the reason for that CAD strength. So Canadian dollar stronger on oil, stronger on the risk on tones. It appreciates when the market's risk on. And we've had rising oil prices, all supporting CAD. The Japanese yen, on the other hand, has been weaker on the risk on flows, equities higher, commodities higher, VIX lower, and bond yields higher, all supporting the risk sentiment trade. So that's why we have a bias to the upside on the CAD yen. Now, that was the currency pair to look at for the day. And just looking at it, we can see that the key areas, we don't want to be buying up near the highs. Because prices extended quite high. We're up towards the ADR high of the day, that 80 level, which would make for a great target. So any retracement back down to that 79.50 or that 79.31 can be considered suitable for buying. Remember, we have, looking at our main screen, we have our strong currency versus our weak currency. So we can see our strong currency is the CAD. Our weak currency is the yen, hence the CAD yen upside. This is how professional traders go about choosing which currency pair to trade. Now, of course, we're doing this on an intraday basis, but you could also do this on a larger scale. So I'll show you a trade that I'm in at the moment. I'm currently selling the US dollar Swiss franc. Now, this is on a weekly chart. Now, for this trade, when price broke through that weekly trend line, you can see this trend line here, that key support zone here and here, price breaking through that trend line. When I got that break, I was short on the US dollar Swiss franc, and as price retraced back up into that trend line, about the 9,200, I shorted a second position. And I'm looking to play back down into this overall support level around that 8,800, 8,750 region just down below. So the reasons for the US dollar weakness was as follows. I was expecting the delay to carry on with the US stimulus bill. There's falling safe haven appeal of the US dollar. The Fed's expected to add more easing. Europe has less COVID-19 cases in the US at the moment, which has been supporting euro-US dollar upside, which is dragging down the US dollar. And there are also some month-end flows that were coming in. So all of those fundamental reasons, and then also potentially expecting the Swiss franc, if we get any further risk-off tones, I would expect the Swiss franc to strengthen, and US dollar Swiss franc seems a legitimate play. So there's exactly the same principle. Now, this is not I'm not telling you should trade this pair, and the move is well underway now, and you don't really want to be selling at these prices because you've got to have a stop back into that zone, and already you're looking at a 300-400 point stop. But this is the principle: the strong versus the weak. Okay, and some of you will remember we're also looking at gold prices. I'll give you another little tip for gold here. Now, I think I shared on the Monday webinar what to look for in gold. and I shared that the way to get back into this market was to take a clear break of a trend line, okay? And we had that very clear trend line break here yesterday, and that was just a very clear moving trend line to the upside. We had clear break and close above, and there's the break. Now that's it. That's what you're looking for, a trend line. You're looking for a break and a close. When you get a break and a close above a level, that gives you a good indication that the level has broken, okay? So you can see here, you might have drawn the line across there, looking at trading 1990 to the upside, and when you get a break and a close above the levels, the 1 hour chart, that gives you a good indication the trend line is broken. You can see you made some really decent upside from 1990 all the way up to towards the 2050 level. So really nice upside there on gold. And any potential drop back down to that 1990 today could be considered suitable for buying. Again, the fundamental reasons for gold, the very low real interest rates. We're seeing bond yields dropping through their recent support levels. All of that is very supportive of gold, and of course that that US dollar weakness, and that US dollar weakness story is really boosting gold even further to the upside. So that's the situation that we have. That's the situation that we have there with the gold chart. Now going back to the main screen. Yeah. So that's the dominant currency sentiment pair we have today. Now the key thing to look at now is what would alter this outlook. So if we have any change in the risk sentiment, so if we see oil prices falling, if we see, for instance, risk sentiment tilting to the offside, that would weaken oil prices, it will weaken CAD and strengthen yen, and would invalidate the outlook. So it's very important to keep a close eye on what's happening with the risk sentiment. So that's the key risk to those markets ahead for the rest of the day. The other thing we need to look at is we need to look forward to key events. So we'll go back now onto the economic calendar, and we'll just have a look at the economic calendar. I'll just switch screens. There we go. And you can see here, this is the key events that we have coming up for the rest of the session. First of all, let's just look what we had. We had ADP come out. Now, that is a negative for risk, because what we've seen is it was expected to be, ADP national employment number was expected to be 1.5 million. We've actually seen 167,000 jobs added. Now that's below the minimum expectations of 500,000. So that is a negative. That is a negative view for stocks. So let's just see how the S&P 500 reacted to that. You can see here. Just for a moment. Yeah, so we can see the S&P 500 selling off heavily on that news, but has found some buyers. Now I'm just going to get rid of my cat. Just please excuse me 1 minute. Apologies for that. Cat is now out of the house. Now looking at the ADP data. Now that is a disappointment, because there was some leaked rumors that President Trump had been saying there's a good jobs number on Friday. Now that kind of contradicts it a little bit. The fact that the national employment data has come in much lower than expected, that is negative for risk sentiment. Now the market will be looking very carefully the next data release, which is the ISM non-manufacturing PMI. Now this is coming out at 3 o'clock UK time in 1 hour and 15 minutes, expected to be 55. Now around 70%, 75% of all of US's GDP comes from the service sector. So very important. And also the largest employment component that goes into the non-farm payrolls jobs number on Friday comes from the ISM non-manufacturing PMI data. So really important that this figure comes in strongly to keep supporting risk. So 55 is expected, well into expansion territory. Anything above 60, that will be positive for risk, and we'd expect to see risk assets carry on. Expect to see upside in S&P 500, downside in the yen, upside in the CAD, upside in oil. Now, if we got a data point that came in below the minimum expectations, 52.4, that might be taken negative alongside the ADP. For now, what it looks like that President Trump's positive comment about the jobs number on Friday is taking precedent. Now, remember, President Trump has in the past talked up jobs numbers before they've been released. He did it a few months ago rather, when he said about a good jobs number coming up on a Friday, and traders were buying the rumor of that all morning. So we might see, a buying all week rumor. So just to be aware of that. Of course, it could be disappointing. In terms of oil, this is a key issue for the CAD yen outlook. There's expected to be crude stocks expected to come in at a draw of -3 million. Now, obviously, there was a draw last night of -5 or -8 million. Let me just remind myself what that draw was. Just give me a moment. I'm just going to look that up, what the draw was last night for the inventory data. I can't remember if it was 5 or 8 million. It'll only take me a second, and I will find that data point. I just want to get this right for us all. See what the private data is on the oil. Nearly that. Yeah, here it is. Right, the private data last night, yeah, it was a draw of 8 million. So obviously, if we see a build in inventory levels of +3 million, that will be negative for oil. If we see a continued draw, anything above -4.7 million, that will maintain the status quo because the expectations are that there's to be a draw. So the surprise here would be if there's a build in inventory levels. 3 million or above, we'd expect to see some sharp downside in oil. So that's really one to keep an eye out. Make sure you're looking carefully at what's happening to the oil markets going into the session. Now, also want to flag up to you tomorrow, key Bank of England decision coming out for the pound. So that's a big issue. Do keep your eyes on that data point for tomorrow, coming out around 7 a.m. UK time in the UK. So do be aware of those Bank of England bank rate decisions. Can be very volatile for price movements. That is the key areas that we need to look ahead for. Now, going back to our main screen, see that we've covered the key events. And just remember, with oil, if you get an unexpectedly build, many retail traders get confused with the draw and the build numbers. So just remember, if there's an unexpected build in inventory levels, that's bearish for oil. And for the other petro currencies like the Russian ruble and the Norwegian krona, if you get an unexpected draw in inventory levels, that's bullish for oil, the CAD, the Russian ruble, and the Norwegian krona. Key market risks are just generally in the market you need to be aware of. Things, not the EU recovery fund, forgive me, that's gone. Things like Brexit. Now, Brexit headlines are quiet at the moment. Summer recess here in the UK, so there's not much politics going on. But remember, there's always a headline risk, so keep your eyes out on the pound. We also have US-China trade tensions and COVID-19 second wave fears. One area to be aware of here with COVID is this. Let me show you this on the other screen. You can see here, we're just starting to see a slight drop in US daily case numbers, and we're seeing a slight rise in European Union case numbers. So what you want to be aware of here is the impact on the euro-US dollar currency pair. This is one to keep an eye on. We have seen some pretty solid upside in the euro-US dollar, and that upside bias has been due to the strong pandemic recovery fund. That's been really positive for the euro-US dollar. Just go onto the daily chart, just get a bit of a better perspective. that strong move higher than the euro US dollar. Pandemic recovery fund, 750 billion euros. But we still haven't got the US stimulus bill agreed. So that's just been supporting the euro to the upside. But if we do start to see a strong drop in kind of COVID-19 cases in US, but a rise in cases in Europe, we could see some of these upside reverse. So that's just a story to keep your eye on in terms of the euro US dollar pair. At the moment, the bias is still euro US dollar upside, and I would anticipate buyers from support. So when you return back to that 1.1650 region, I would anticipate to find buyers there. So do keep your eyes and your mind carefully on that data point. Again, we're looking at a potential breakout on the weekly chart here as well. So that could be indicative of higher prices for the coming week. One to keep your certainly keep your eye on and keep looking at. So with the euro US dollar pair being covered, we'll go back to the main screen. There's one last thing I want to show you, and that is an important thing. And the important thing I want to show you, this is very important, is the strong bullish run in gold and silver. Now, okay, so gold and silver have been on a really, really strong run recently. We can see 3 solid weeks of buying. It's been an absolute ripper of a move. Now, the temptation when you see these kinds of moves is just to jump into them and just try to, you're going to go long, okay? What you want to do is, if you go back to 2008, 2009, right, we saw a strong upside in gold, okay? It came out of the global financial crisis. We saw 2008, 2009, and then the situation was perfect for gold upside. We had low interest rates around the world. We had quantitative easing, the printing of money, low bond yields. Exactly the same environment we have today, we had then, and price rallied, from this kind of, 900, 1,000 level all the way up to 1922. So an absolute massive run, hundreds of dollars to the upside in gold prices. Now, when you see price like you do today, the temptation is just to jump in and just to buy, okay? But so markets don't move in a straight line. They have their ebbs and their flows. So from a longer term perspective, for the next 2 years, obviously circumstances can change. But at the moment, the situation looks very bullish for silver and gold going forward, okay? So look for key breaks of trend lines on a longer term perspective. Okay, you can see here you got a trend, a couple of points, 2 or 3 points you need for a trend line, and you see price moves on to the upside from the break of the trend line. You can do here, you can draw another, little trend line there just across the top. You can see price breaks above and carries on, a little break of a trend line. You can see again here, another little trend. You got a nice ascending trend line here, the upside, and you got a break to the upside again. Here you got another little trend line, a couple of solid points there to the upside, and then break to the upside. So look at these trend lines. Obviously, politics is going to play a role in this, and you've got to be sensitive to the latest moves. Keep coming to these webinars, and obviously I'll keep explaining where the current situation is for gold and silver. But just at the moment, you can see, like from an intraday perspective, back down to this pivot point 2000, 1990, it would be a perfect area to look to buy gold, particularly for today. So retracements back to that. But aside from that, don't get sucked into just buying at the top. This price could easily retrace back down to 1850, maybe back down to 1750 before carrying on its way higher. So keep your eyes on that and just watch your leverage levels going forward. So going back now to the main screen, you can tell me what trades you're looking at. What's the main? Any questions? I'll take a look now in the question panel. And remember that anytime you've got questions, oh yeah, okay, sure. Will gold retest the broken level? Obviously, there's no way of me answering that question. But put it this way, Shwa, I'm not buying gold unless we retest that broken level. Okay, that's the only entry I'm looking in for now. I had this marked as an entry. I pulled my orders yesterday, so you can imagine how annoyed I was when my buy on stop orders at 1990 weren't filled. So I'm resisting the temptation to jump in. I resisted the temptation to jump in last night when it was about 2001, 2003. I was thinking, don't I? No, waiting for that pullback. So Shwa, will price retest that level? No idea. But I only want to buy if we get a retracement back down to that 1990 level. Okay. So let's first look at New Zealand US dollar. Now, New Zealand US dollar, that's being supported to the upside on the key US dollar weakness. Now, the commodity, New Zealand dollar commodity currency, so we expect strength in that. So today you'd expect New Zealand US dollar upside. For me, I haven't got a strong conviction on buying the pair, but it's obviously being dragged higher by the US dollar. We've got the RBNZ coming out next week, so it'll be interesting to see what's going on with the RBNZ in relation to what's happened to the RBA. So that's what I'll be looking at for next week. But for now, New Zealand US dollar, yeah, there's an upside bias in place. Pound Aussie dollar. Let's just have a little look at the pound Aussie dollar. Let's just have a little look. Now, okay, let's look at the pound Aussie dollar. Now, pound Aussie dollar, looking at it from a larger perspective, you can see that we've had that pound weakness. We've had the Australian dollar strength on the rise in commodity prices and the general recovery in stocks. Now, Australian dollar tends to be a very weak month for or in August, very weak for the Australian dollar. But the downside bias remains in this pair. You can see that price is just at the moment, you can see price just forming that key trend line to the upside there. Now, I would be looking at this pair. My bias for this pair will be downside. I think what I'll be looking at carefully, looking at a break of this level here, the 1.767. So for me, I do have a downward bias on this. I wouldn't want to be selling at these levels. Potentially, you could sell at the 300 level here. Up at that, there's a near-term resistance level. It's the top of the ADR high. I would consider potentially shorting from that region. We've got pound weakness, we've got Australian dollar strength on the commodity-based sentiment at the moment. But I would be looking at a potential break of a trend line for a swing trade. Particularly if we see negative Brexit news, then we expect that level to plummet quite strong. Okay, hi Mohammed. Do you mean that the US dollar is keeping decline due to the COVID curve only? It's one of the factors, because obviously a slowing US economy is going to weigh on the US dollar, but there's a number of different factors weighing on the US dollar at the moment. You've got the US stimulus bill worries, Mohammed. So the fact that those stimulus bills are not expected to be kind of agreed until at the earliest, I think it's Friday of this week, that's weighing on the US dollar. We've got falling safe haven appeal of the US dollar. Remember that the US dollar is a safe haven, but it only really acts as a safe haven in times of kind of quite extreme crisis. So you remember here, when we had the COVID-19 worst crisis, everyone wanted the US dollar. Lots of countries around the world, their debt is denominated in dollars. Some smaller countries don't have their own currency. Instead, they prefer to trade, import and export on the US dollar because it's a more stable currency than their own. So in times of extreme crisis, everyone wants the dollar. Now, that extreme crisis has kind of faded now. So as a result, we're seeing the safe haven appeal of the US dollar fading. The Fed is expected to add more easing. You just take a look at 10-year bond yields. Let me just show US 10. you can see here that bond yields are just going, absolutely through the floor. We can see this near-term weekly resistance level, and that's been weakening the dollar as well. So the dollar's been weak for quite a few different reasons. Mohammed, in terms of the US election, will it be affected by that time? The US election does have the potential to impact the US dollar, and we need to keep a careful eye on that event risk for sure. Chubivan, Aussie US dollar long. Again, yeah, you'd favour an Aussie US dollar long. That makes sense, Chubivan. We've got commodity-based commodity-based currency like Australian dollar benefits on a risk-on tone. The market is still risk-on. Yields are lower. Equities markets are higher. The VIX is lower. Commodities are higher. Yeah. So again, we are extending past the ADR high for the day. That is a key level in the Aussie US dollar. So if you just take a look at the daily chart, you can see you're just breaking through that level there. So that means with a break and a close that potentially you might if for the more aggressive traders you might take a a long from that 7218 7228 level. That is potentially legitimate because we've had a break above that recent high. So that level there. Let's just have a little look at the. Want to see the pivots. Yeah, so looking at it, moving anything, a return back to this level here could be considered suitable for longs, and the next target would be that 7265, 7250 region up ahead. So that would be something to be looking at going forward. Yeah, Chuban, a pound Australian dollar sell. Yeah, sure. You're short pound yen ahead of the Bank of England tomorrow. Yeah, Don. Okay, so yeah. I would be cautious, Don. The reason is we're just seeing this, we're just seeing this broken trend line to the upside and prices finding support there. You can see that little bit of support just coming in around that 137.70 region. Now, the problem with being short into the meeting, Don, is that you're relying on a couple of things. You're relying on a bearish Bank of England. Now, I'm just going from my memory now, but I think Andy Haldane is still in hopes of a V-shaped recovery for the UK. So the risk here is that the UK is a little bit more positive. Now, obviously, Don, I don't know what the Bank of England are going to say tomorrow. I don't know what their interest rate is going to be. We can see the expectations, and the expectations are there won't be everything will be voted to be unchanged. That's the expectations, and the expectations are that the bank rate is going to stay at 0.10%. So if there was a cut, that would obviously be excellent for pound yen shorts. But as I said, we just don't know. So you're having that risk. Technically, we've broken above that line here on that key trend line on the weekly chart. So, price is being supported to the upside for now. So I would be concerned about being short ahead. Now, it could work, Don, but you're just taking that risk, that event risk. And that's fine to do, Don. Sometimes you do it. So I'll show you a trade I had. I was shorting the Aussie New Zealand dollar this week ahead of the Reserve Bank of New Zealand, Reserve Bank of Australia decision. Okay, so I was looking at, let me just show you. Yeah, so I was short the pair heading into the meeting, and I was expecting the RBA to be negative. I was expecting them to sort of be talking down the Australian dollar, and they weren't. They were positive. So what I did is I closed my trade out. Now my trade I entered, around this kind of region here. I had my stops running above the swing highs. But as soon as I woke up the next morning and I saw that the RBA had been positive, then I closed my positions. So that's the key thing, Don. If you're going to take that kind of educated guess, if you've got reasons that you think the UK is going to be negative, the only reasons I've got is Andy Haldane was more positive about the state of the UK economy. So you'd need to have more strong reasons. Whereas when I was shorting this Aussie pair, there was some reasons I was expecting the RBA to be more negative. There was, commodities have been high, the fact that Victoria State had another strong outbreak of COVID-19, blah, blah, blah. I was thinking, there's no way the RBA are going to be positive about this. And they weren't exactly positive about the COVID-19 outbreak, but they were more positive than the market was expecting, and so the price rallied. Yeah, should we go selling if it reached 1999? Mohammed, no, because I think you'd be selling into support. 1999. No, because if you're selling here, Mohammed, you'd literally be selling into support. So you would be selling where people are buying. Alexander, great. What's the goal of euro US dollar for the end of the year? A day is a long time in trading, isn't it? Let alone a year. The broad consensus at the moment is that the euro is doing better than the US dollar, and there's upside bias on the euro US dollar at the moment. Where it'll get in a year, it really is anybody's guess. Okay. Key things we're looking at, you can see this massive trend line. Okay, break and close on that euro US dollar trend line to the upside would be important. Okay, that would indicate higher prices. So look carefully for where price closes on the euro US dollar. That's a big one to be looking at. Oh dear, I'm sorry guys, I haven't been sharing the chart. It's very annoying, and I'm sorry about that. Right, we'll just carry on. We'll look at the euro US dollar. See, euro US dollar, look on that monthly chart. Yeah, thank you, Trubavan. Very helpful as per usual. You can see here that monthly trend line. We can see prices trying to break. So Alexander, the fundamental bias is euro US dollar upside. So that still bias is there. The fact is, you've got the Pandemic Recovery Fund agreed by 27 nation states. The fact that 27 states were able to come together was taken by the market as a very positive sign. We've got US dollar weakness, number of reasons for US dollar weakness. So all of that points to more euro US dollar upside. Okay, so yeah, we are looking at more euro US dollar upside. Certainly 1.25 is a legitimate target. So next target is 1.25 euro US dollar, and we could see that by the end of this month, stroke early next month. So that's about as far as I go. The thing, Alexander, you've got to remember in trading is that you're always looking at probabilities, and you're always looking at what's likely to happen. You never know exactly what's going to happen, and each day you're making a new assessment, and you're making an assessment of the facts because the facts change. So who knows what's going to happen between now and December? If someone had said to you, Alexander, that that if they said to you in January what life would be like here in June, in August, you'd never have believed them. So the markets and life changes so quickly, you can't make a meaningful, really prediction very easily for currencies and commodities. Obviously, like with gold, this is a slight exception because we can see that there's lots of bullish reasons for gold, and as long as nothing changes, you'd expect another 2 years of a gold bull year market. That's what I'm expecting at the moment. Now that could change. You could come back next week and I could say I no longer expect a 2-year gold bull market. So the key thing to be realizing is you're constantly assessing the situation. I hope that makes sense. Hi, Mohammed. Yeah, good to have you. Yeah, Ethan, I'm sorry about that when I didn't have the charts on the screen. Apologies. This GoToWebinar control panel, I find it's not very easy to always switch the screens. So it's very easy to mistakenly not short screens. Yeah, okay, Don, I've gone through that pound yen short. Okay, Titus, you're looking into investing in the currency pair. Seems like the pair is resistant to any significant pullback for re-entry. Would you look into this pair as a reasonable investment? Yeah, as I said, I'm looking to buy from pullbacks, euro US dollar. So I would consider a long from 1.1650. Anything in this region here, considered a long. Also, if you get like, this is a key trend line on the monthly chart. So a break and close, but if we get a break and close above that, and as long as market conditions remain the same, I'd look for a retest of that around the 1.780, 1.17, 1.1800 level. Then obviously, if you get a weekly close back underneath here, you just look at liquidating the position. That's potentially what I could see one way of looking at that. Oh, that's great, Don. I'm glad that helped. Yeah. Yes, Mohammed. Yeah. Great. Well, I remember when you asked your question, I wasn't showing you the chart. Let me show you here. Look, 1999, Mohammed, is where I'm looking at buying. Okay, you can see here, look, that break and trend line. You can see that's an ascending triangle. It's a key continuation pattern. Look how price breaks out. Everyone's looking at this. Okay, that's the point to enter. Okay, bang, everyone's in. I came here, I missed the entry. I had a buy on stop. I cancelled my buy on stop. It's annoying. And then I was looking, I didn't want to chase price when it was around 2003, 4 yesterday. So I was just waiting for a pullback to that 1990 level. Didn't get the pullback, and so I've missed the move. But if I get a pullback today, back down to that 1990, 2000 level, I will be looking at buying. So when you're saying you're going to sell at 1999, you're literally going to be selling where the rest of the world's going to be buying. Now, obviously, if there's a fundamental shift, and price can just move through these support and resistance levels like butter, but there needs to be a fundamental shift to it. Yeah, okay, Don. Right, great, Don. You thought there would be dovish given the rise in COVID cases. Now, yeah, there is a rise in COVID cases in the UK, but it's not like that. It's not. Remember the RBA recently? The RBA, they had a huge rise in COVID-19 cases, and they weren't that dovish. So Andy Haldane is still, wanting that V-shaped recovery. So Don, obviously, I don't know what's going to happen. I don't know what they're going to say. But I'm glad to hear what your reasons are. In trading, it's very important to have that conviction. So you're more than, it's more than legitimate to hold that position. So if you were going to hold it, just make sure you're there for the release of the Bank of England rate decision. And as soon as you realize that the Bank of England aren't worried about the rise in COVID cases, then you want to liquidate your position. Also, you want to think about the yen, because the yen at the moment has reasons for weakness because the market's risk on. So if that risk on sentiment is still in the market, then you're fighting the yen because the yen is weak. So you're wanting to trade a weak pound against a weak yen, Don. Do you see? So really what you've been looking at, you want to find something that's strong. So at the moment, what's a strong currency? CAD. So maybe a pound CAD short make more sense. Let's have a little look at the pound CAD. Okay, so you can see that you can see pound CAD's very range bound because they've both been reasons for weakness. But at the moment, we got the CAD strength, and that's dragging the CAD down. The problem with the yen is obviously there's weakness for both. So you've got to have a think about that, Don, and work out what you want to do. Alexander, what types of analysis do you use and why? Yeah, I use a combination of fundamental and technical analysis because it's just what I find most helpful, Alexander. So I'll show you, like for me, it's when I get trades like this. This was a trade I took on silver, which just really sums up for me why I love well, I'm very happy with the method of trading I've chosen. Like if you look here, you can just see that this was a trade that I flagged up live at the time. It was just very simply, I was on the silver chart. I had reasons to be bullish silver, Alexander. Okay, I was looking for a place to enter, and when I saw this break and close above a trend line, that was my reason for entering. And then you can see you've had this huge move higher in silver prices. Now, obviously, I didn't get all of that move. I only got a fraction of that move into that weekly resistance levels around that 20. But the point is, look, fundamental and technical analysis is a great combination. Understand the fundamental reasons for market moves, and then you're much less likely to get caught out, and the technicals end up working much better. Shua, yeah, I run a Telegram channel. Let me just show you. And on my Telegram channel, I do publish, outlooks for the day. Let me just show you. And it is, so if you go, I'll just show you on the screen. Just take a screenshot of this. If you go like Forex trading, smarter investing, that is where I I share a lot of currency outlooks there. Forex trading, smarter investing. Don't miss that. Okay. Right, good. Yeah, is the rally in oil sustainable? Again, Titus, that's the kind of question that you need to do your own analysis to work out, because no one can answer that question. Is that rally in oil sustainable? It's an impossible question to answer. What are the fundamental reasons for oil? Now, we've gone through that already today, that there was a big draw in the private inventory levels of 8 million barrels. We see that risk markets are on. That's supportive of oil. Now, will those markets carry on being like that? No one knows. We obviously have a risk event coming up, which is the crude data is being released in about an hour and 15 minutes. So there's expected to be a draw of -3 million. Now, we know that the market is expecting a large draw because the private inventory data, which makes up about 80% of the normal data, was a draw of 8 million barrels. So is the rally in oil sustainable, Titus? Well, it depends. If we get a large build in inventory levels, then we could see oil prices sink. If we see risk markets turning off, we'll see a drop in oil prices. So we have to keep looking at the data. We've obviously got the US data coming out, non-manufacturing PMI data. That's likely to impact risk. If we see a 52.4 reading or below, that very well might tilt risk off. So be aware of that. Mohammed, you're welcome. Yeah, Don, oh, that's great. I'm glad you're getting that concept. Just be careful, Don, of being too trigger happy. That's what you're going to be careful of. Wait for those trades when you're really set up. When you're really like, oh, this is exactly the right trade to get in on. Let me show that CAD yen. That was quite a good example today. On the hourly chart, okay, because this is a good example, because you could have come to this chart early in the morning, okay. Let's just check got this. Check what time that is. Yeah, just going above that high there. Okay, you're going to come to the chart early in the morning, okay, and you got a bias and Cadian upside, you've got this little trend line, you just entered on that break of that trend line, just playing up to the ADR high of the day. Okay, even could have taken it lower here, you know, just break of that trend line, and you're just moving higher. But don't make things too complicated, and obviously the risk of preempting events, just be responsive, Don. Don't hold on when you're wrong. Do you know what I mean? When you're wrong, just get out. Which is what, you know, which is fine. That's what I did when I was shorting the Aussie New Zealand dollar. And look, you know, aren't I glad that I got out? Because as soon as the RBA went dovish, I knew that's a disaster. You don't want to be in that trade, so you get out. You don't wait for your stop to be hit, because that's just no point. When you're wrong about a trade, you know you're wrong, so you get out. So that's the key thing. So as long as you're responsive like that, that's, you know, that's nothing wrong with that at all. Oh, do you use fractal theory or non-miracle theory from you, Alexander, or you use only graphical technicals? I use a range of different technicals. Over the years, I've just picked up lots of different systems, and I just have a look at them. So the ones, probably my favorite ones, are the very simple ones, like breaks of trend lines. They just tend to be so easy and simple. And of course, you know, they're just easy to put on the chart. Obviously, I like pivot points. They're very reliable for intraday trading. So yeah, you're welcome, Shra. You're welcome, Titus. No, very good. Well, that's been a really wonderful time. Thank you so much for all the great contributions that you've had. Don't forget, we'll be back here again next week, same time, same place, and here on Monday. And don't forget, this is a special time only for HYCM clients. So really, you know, it's one of my favorite webinars of the week, because it's a lot more, you know, a homely feel. Monday at 1:30 British Summer Time, we've got the week ahead, looking and getting ready for that. But this Wednesday one is time just for HYCM and our clients. So you know, it's my, as I said, it's one of my favorite times. So do if you are available, do attend this, and don't forget, you can ask lots of different questions, and you know, really happy to share the benefits of my knowledge over the years and help direct you guys. So don't forget to keep asking your questions like you did today. Thank you very much for the questions. They were varied and good questions to ask, and I was able to give some good you know, direction as a result of them. So thanks for your input to it. And of course, I hope you have a really great week, and I'll see some of you guys back here again next week. So thank you everybody for attending. It's been great. Thanks now. Goodbye.